Hello, my name is Steve Bigelow with the Candlestick Forum. Markets are still in an indecisive trading range where they're in an uptrend. Let's get to one of them. We can see how the Dow is in this slow uptrend, but it's not very decisive. Look at all the dojis here, and look at the fact that they take it down one day, up the next day. It's just not a very convincing uptrend. And today, after trading up 200 points, it sold off approximately 200 points going into the close, making it a doji day. Still telling you there's indecision between the bulls and the bears. The NASDAQ is a little bit more compelling in the sense that even though it's trading indecisively, it's got a much stronger trajectory, still well above the T line. However, even today, with it trading up pretty strong, it sold off going into the close, creating a doji type day up here in the overbought area. So the safety trading factor is trading the patterns. The J hook patterns are working very effectively, especially in the oil sector. You can see Apache came up through the 200, pulled back, used the 200 as support, doing a J hook pattern. This dramatically improves the probabilities of wave three in progress, and it also improves the probabilities that you're in a sector that is going to still act strong because there's other stocks in that sector acting strong. Occidental, you can see the J hook pattern came up through the 200, pulled right back, did a buy signal right here off the 200, has much greater probabilities. Wave three will be the same magnitude as wave one. So when you start seeing a bunch of stocks in a sector all acting well, just simple common sense tells you that sector is being bought. For whatever reason, it's being bought. We don't need to know. All we need to know is that across the board, they are buying a lot of stocks in that sector. That's much more comforting knowing that you're buying stocks in a sector that's being bought by the big money. Uh, just adds that much more confidence that you're in the right place at the right time. The retail stocks also doing the same thing. A J hook pattern setting up in Jemiah. You can see where it did a nice piercing signal right here at the T line, making a positive open tomorrow, giving you a doji sandwich prospect of more upside, further confirming the J hook pattern. You saw that in Nordstrom's J hook pattern, continuing the uptrend. And the more compelling J hook pattern is the bobble pattern. That's where that comes up, fails at a resistance level, pulls back usually to a support level, and most of the time it's the T line, and then comes back up through that level. You've got a J hook pattern that's even more identifiable, seeing where it resisted and where it's breaking out. If you took the 50-day moving average off this chart, you'd still have a good J hook pattern setup. This is what improves the probabilities of being in the right trades at the right time. Whoops. So we're seeing that in Monera. Another J hook pattern. Look where they came back to on the selling, the profit taking, right smack dab to the T line, now taking it back up. Produces a lot more confidence that this next wave could be the same as this wave right here. We recommended Kirkland's because of the fry pan bottom a couple weeks ago. It's continuing its move because now it's done what we call the classic pattern, a fry pan bottom followed by a J hook pattern. Wave one and wave three will be the same. And not only do the patterns work as far as putting you in a higher probability setup, being in the right place at the right time in a bullish trend, they also work in a bearish trend. Look at the bearish left-right combo right here at the 50 on Overstock. Today it traded up a little bit, but indecisively, still failing at the T line. If we see this open lower, we've got a bearish double doji setup, which would improve the probabilities dramatically that this downtrend is probably coming back down into this range. So right now, with the markets trading indecisively, even though they're still above the T line, the logic is you still want to have good, strong stocks in there. So put it another way, you want to have stocks in there that are in good, strong chart patterns on the bullish side, and you want to have some short positions in, showing good bearish signals on the downside. That'll be it. We'll see you in the chat rooms. Well, try to end this thing.